Opendoor finished the week on a quieter note, closing Friday's regular session at $4.45 per share, up 18 cents or just over 4%. Then, in the aftermarket, it gave back about 5 cents, trading more or less flat. After a week of big swings, intraday highs close to $5, sharp pullbacks, and strong rebounds, that flat trading might look unexciting at first glance. But in reality, consolidation after such a volatile stretch is a good thing. It shows the stock is finding its footing, holding key support levels, and setting up for its next move. Let's break down what really happened on Friday. Early in the session, the stock surged all the way to $4.93. That was just shy of the $5 ceiling we've been watching all week. But once again, it couldn't hold above that level. Profit-taking set in, and the stock spent much of the day bouncing between $4.25 and $4.45. So while it didn't break out, it also didn't break down. Instead, it consolidated at higher levels, which is often what you want to see in a stock that's been running hot. The real story this week, though, wasn't just about technical levels. It was about leadership and sentiment. On Thursday, interim CEO Shrisha Radhakrishna bought shares in the company. That insider purchase was more than just a headline, it was a signal. Insiders buy when they believe in the company's future. They have access to more information than anyone else, and they understand both the risks and the opportunities. So when the interim CEO puts his own money into Opendoor, it tells investors that he has conviction. And Shrisha didn't stop there. He went on X and said that other board members will also soon be investing their own money into the stock. That marks a shift from a board that was criticized for being inactive to one that is now visibly aligning itself with shareholders. For retail investors, who've been asking for more commitment and more transparency, this was a turning point. The frustration of past weeks gave way to optimism. The vibe changed. This optimism is being carried by the retail community, and it's impossible to ignore the role that Eric Jackson has been playing in this movement. For the 10th day in a row, he was outside Drake's mansion with his sign, urging the rapper to invest $100 million into Opendoor. It's easy to laugh at the spectacle, but you can't deny the persistence. It's creating headlines, it's drawing attention, and it's keeping Opendoor in the conversation. And beyond the humor, it represents something important. The retail base is passionate, creative, and relentless. That passion has also translated into practical ideas. Retail investors aren't just talking about price targets, they're suggesting ways the company could improve. One of the suggestions floating around is that Opendoor should invest more in Google Ads. Right now, the company doesn't rank highly in search results, which means potential customers may not even find them. Improving that visibility would be a relatively easy win, low cost compared to buying homes, but potentially high impact in terms of traffic and leads. That's the kind of insight a decentralized retail hive mind can provide. And that's part of what makes this story unique. It's not just a stock with high volatility, it's a company with a community that's engaged, that's pushing leadership to act, and that's contributing ideas. When Shrisha said he'd scrolled through thousands of retail comments, he wasn't exaggerating. There's a movement forming around this company, and leadership is starting to listen. So where does that leave us heading into the weekend? In my view, we're at an inflection point. The $5 ceiling remains a challenge. Every time the stock approaches that level, sellers come in. But at the same time, $4 is proving to be strong support. The stock has tested it multiple times and bounced back. That creates a range where consolidation can happen, and consolidation builds the base for bigger moves. The big question now is what catalyst will break the stock out of that range. Insider buying is one catalyst, and we've already seen its impact. Board members following through on Shrisha's promise and buying shares themselves would be another. News on the CEO search, who the permanent leader will be, would certainly be a catalyst. And then there are the broader strategic shifts, like moving toward an asset-light model and integrating AI into the business. Each of these has the potential to move the stock in a significant way. From a macro perspective, we also can't ignore the backdrop. Rate cuts are expected later this year, possibly as early as September. For a company like Opendoor, which depends on housing transactions, lower rates would be a huge tailwind. More buyers in the market, more sellers able to move, and more activity overall would flow directly into Opendoor's business model. Combine that with the company's tech-driven approach, and you start to see the bigger picture. A company that's not just surviving volatility, but positioning itself to thrive when the macro winds shift. Let's also not forget the long-term targets being discussed. Eric Jackson has publicly said he sees Opendoor as potentially reaching $82 a share. That's not a short-term call, it's a long-term vision. And it's a reminder that for all the short-term noise, the real story here is about where this company is heading over the next few years. The asset-light pivot, the AI tools like Repair Copilot and Risk AI, and the broader positioning of Opendoor as the Airbnb or Uber of real estate, that's the foundation for that kind of upside. So yes, Friday's aftermarket was flat. Yes, the stock gave back a nickel. But in the bigger picture, that's just noise. What matters is that the company is consolidating at higher levels, that insiders are buying, that the board is signaling alignment, and that retail energy is stronger than ever. That's the story heading into the weekend. If you're an investor watching this play out, patience is key. Volatility will continue. There will be days when the stock soars and days when it falls sharply. That's the nature of a stock with heavy retail interest and a high short interest. But the long-term opportunity remains intact, and the recent developments only make it stronger. To wrap it up, Opendoor's Friday aftermarket may have looked flat, but the foundation is being laid for the next leg higher. With insider buying, retail passion, and potential board changes on the horizon, this is not the end of the story, it's just the pause before the next chapter. As we head into the weekend, the message is clear: consolidation is strength, alignment is progress, and the future is bullish.